chapter 6. So again, this is going to be a tutorial for chapter 6. We're still talking about financial statements as well as the closing process. So I'm going to just do a recap from Monday's class. So if you recall, we talked about the order of preparing financial statements. So the first financial statement, we have 3. The first one we prepare is going to be our income statement. So that's going to be our first financial statement that we always prepare at the end of the month, followed by the statements of owner's equity. And then the last financial statement that we prepare at the end of the month is going to be our balance sheet. So again, there are 3 financial statements that most businesses prepare at the end of the month. It's going to be our income statement, our statements of owner's equity, as well as our balance sheet, okay? So let's get into, and we're going to go over each one of those financial statements. So let's begin with the income statement. So the income statement has 3 lines. Of course, we're going to always fill in the company's name, followed by what the statement title. In this case, the statement title is going to be income statement, which is the name of the statement. So we're going to have the company's name, followed by the income statement title, which is what we will write in. And then we'll have the period ending. So for example, for the month ended October 31st. So we will always put that date as well. Also, as a reminder on your income statement, dollar signs. We always begin our dollar signs at the top of the column. Only at the top of the column. And then our revenues are always going to be listed first. So our income statement includes revenues and as well as expenses. Those are the accounts. So your revenue account as well as all of your expense accounts is what your revenue is going to, your income statement, I should say, is going to show. When there is only one revenue account, you just total out your revenues. In most cases, a lot of times, most small businesses especially only have one revenue account. And then we're going to follow about our listing our expenses, which is what the accounts that's going to be listed next. So again, the expenses are going to be listed. We can list those by the account number order, or we could just list them by the dollar amount. So from the largest amount to the smallest amount is how we can list them, or or we could again list them by account order. We should always single rule to indicate additions as well as subtractions. Then we would total all of our expenses. Then we will compute. The next step would be to compute our net income or net loss. So remember, our income statement is how is where we compute our net income or net loss, because it's going to be if your revenues are greater than your expenses, then you're going to have a net income. But if your revenues are less than your expenses, therefore you're going to have a net loss. That just means you paid out more than what you received in for that period or for the end of that month. So this is an example. So you know that the company that we have been following throughout the book is Mitchell's Campus Delivery. As you can see here in this example, we have our worksheet, a partial worksheet that's going to show Mitchell's Williams income statement. So as you can see here, just like I just pointed out, we show our delivery fees, which is going to be our revenue account, which is what's going to show in our income statement, as well as all of those expense accounts. So in this case with Mitchell Williams, as you can see, we are showing a balance of $8,000 in revenues for the end of, in this case, it's the end of June. But we show expenses totaling $3,300. So as we can see, our revenues are larger than our expenses. Therefore, we have a net income of $4,640 for the end of the period in this case. Okay, so let me just switch over just to show you how a blank income statement will look. So this is how a bank income statement will look. As you can see, we have our 3 title lines. So we will list the name of the business on the top line. On the middle line, we will list the name of the statement. In this case, it will be income statement. Then we will list whatever period that we're using. In this case, we will be listing for the month ended and whatever that month is. We will list out here. We will list our revenue account and then followed by all of our expense accounts. So that's just an example of how, and in a minute, we will be filling out this income statement. Okay, so again, this is going to be the income statement for Mitchell's campus delivery business. And as you can see, this is going to be a partial the worksheet. Pull from the income statement on the worksheet. This is going to be how you should fill out a completed income statement. Will look just like this. As you can see, as I pointed out, your revenues are listed first. So the word revenue is going to be listed as in this case, the revenues are being generated from delivery fees. And that's what's listed here, and as well as that total. So as you can see, that $ is listed on the top of the columns, and followed by all of our expenses. We write in the words expenses, and under there, we write in all of our expenses. In this case, as you can see, that they are just listed as the account by account number. So they're not listed in the dollar amount or ascending order, but they're listed by account numbers. So all of our expense accounts, so we total our expenses and we calculate our net income. As you can see, just what's showing on your worksheet. That income statement information pulled from the worksheet was pulled over to the actual income statement for the end of the period. And as you can see, we have a net income. Just it should show the exact same what the information that you pull from your worksheet. Your revenues should show the same information that you pull from your worksheet. So at the end of the period, this is what your worksheet that you should pull from your income statement worksheet to complete your final or prepare your final income statement. So statement of owner's equity. So the statement starts with the capital account. So this is where we list out all our capital account balances as of the beginning of the period. So instead of showing revenue increasing and expenses decreases the owner's equity, this statement just uses the net effect. So it also going to bring over that net income or net loss from your income statement. So this is why it's important that we have to complete our income statement first before we can complete our owner's equity statement, because we need to know whether we have a net income or a net loss. The drawing account also going to show us, of course, if Mitchell had or if the owner had withdrew any money for personal use as well. So the drawing account is also going to show on the owner's equity account. So again, this is the information. This information can be pulled from the worksheet as well. So as you can see, this is how you would fill out the owner's statements of owner's equity. Kind of this same format. You're going to have the name of your business, the name of the statement. In this case, it's going to be statement of owner's equity. And then, of course, you're going to show what the period is. So in this case, for Mitchell Williams is for the month ended June 30th and whatever that year is. Same format you're going to follow. Mitchell Williams Capital, this is going to always list the first of the month. So this is going to be what his capital was at the beginning. Investments during the period. So we know that this business has started in June, on June 1st. So therefore, he started the business with $5,000. That's why the statement of owner's equity here in this case is showing June 1st because this is because we don't have a balance yet, but we invested on June 1st, $5,000. So total investments, we didn't invest any more, made any additional investments, I should say, during the course of this month. So total investments is still going to be $5,000. So again, remember that net income or net loss that we had on our income statement. We need to pull that over for the month of June onto our statements of owner's equity. So in this case, we had a net income of $4,640, which is what our income statement showed, that we had a net income. So we have to subtract the money that the owner withdrew for personal use. In this case, Mitchell withdrew $3,000 for personal use. So we need to subtract that $3,000 from our net income. So our increase in capital is only going to be $1,640. So his total at the end of June, his original investment plus his increase in capital, which was only $1,640. And this is because he had a net income of $4,640, but he withdrew $3,000. So we only had an increase in capital of $1,640. So his total capital for the month of June is going to be $6,640. We add our total investment plus our increasing capital, that's going to give us our statement of owner's equity balance at the end of the period. So again, that's how you fill out a statements of owner's equity. So let's just switch gears for a second and let's just look at a blank copy of a statements of owner's equity. As you can see here, this is how that statements of owner's equity form would look. So again, we have our lines that's going to record the name of the company. On the top line, we're going to have the name of the statement, which in this case is going to be statement of owner's equity. And we always, of course, is going to record the period ending. And we're going to list all of the any original investments, net income and net loss, minus any withdrawals. And then we're going to calculate our ending capital amount for that period. So let's move on to the balance sheet. So on the balance sheet form is going to report your liabilities as well as your owner's equity sections. So that's what your balance sheet is going to report. Account forms like asset section is on the left, is going to always be reported on the left-hand side, and the liabilities and owner's equity section is going to be reported on the right side, just like the accounting equation. Remember, in the accounting equations, assets are going to be listed on the left-hand side of the equation, and your liabilities and owner's equity is going to be listed on the right-hand side. So we fill out the balance sheet just like the equation shows. Assets on the left, owner's equity and liabilities are going to be listed on the right. We're going to list those similar items are going to be grouped together. So in this case, all of our assets are going to be grouped together. We're going to group together all of our liabilities accounts, and we're going to also list together all of our owner's equity balances as well. So in this case, we're going to be working on, in our ebook, on problem P6-7B. So the worksheet, and I'll show you that worksheet in a second. The worksheet, we have a completed worksheet. Remember, our business that we're going to be following today is going to be Juanita's Consulting. That's what type of business that we're going to be following today. So one of the things that we're going to be doing today is we're going to prepare an income statement. We're going to prepare a statement of owner's equity, and we're going to prepare a balance sheet. So we're going to prepare all three of the financial statements for Juanita's consultant. And that's what we are going to do now. So let's begin. So as I pointed out earlier, in this assignment, we're going to be covering, this is the completed worksheet for Juanita's consultant. And of course, this is going to be for the period ending June 30th. This is her completed worksheet for the month of June. As you can see, we have a completed trial balance, followed up by all of the adjustments that were made for the period. And then we, of course, we have our adjusted trial balance. So remember, we use our adjusted trial balance because this is what proves debits equal credits. So on our adjusted trial balance, we always need to complete that because we're going to prove that debits equal credits. As we can see here on Juanita's consulting business, her trial balance, adjusted trial balance, is in balance. The reason why we call it adjusted trial balance, because here we have the trial balance. The trial balance is going to, these balances are going to be pulled from your general ledger balance. So we haven't included any adjustments. So therefore, we have to make those adjustments at the end of the period. Now we need to go in and adjust our trial balance based on those end of the month adjustments that we made. So this is why we call it an adjusted trial balance, because we bring over all of our accounts. We just bring over all of our accounts along with our new balances from adjustments into our adjusted trial balance. When we bring over all those accounts, our debits on our adjusted trial balance should equal our credits. As you can see in this case, in Juanita's consulting business, she has $13,014 in debits as well as credits. Okay. So moving on to Juanita's consultant, the income statement portion. Again, we already know that what's included on the income statement. We have revenues are included on the income statement, as well as our expense accounts. So this is our revenue account. And as you can see here, let's go back over to our revenue account. Our revenue is being generated from consultant fees. So we, for the end of June, we had $4,204 in consultant fees. All of these totals, of course, our revenue accounts carry debit balances. Credit balances. So we brought it over on our income statement as a credit balance. So therefore, it's going to show on the right side of the income statement. And you will see that just in just a moment when I start pulling this information over. Again, here on the debit side, we're going to show all of our expenses. So from wage, all your expense accounts are showing on your income statement. So in this case, we can see that she had expenses total $2,754, but she had revenue totaled $4,204. So in this case, we can see that she had more revenue than she did expenses. So therefore, at the end of June, Juanita's consulting business had a net income of $1,450. So with that being said, let's just pull in our blank income statement, and we're going to use our worksheet here. This is our income statement. We're going to use our worksheet and pull this information over into our final income statement for the period. So as we said earlier, We always include the company name, and this is what we're going to include. So it's going to be Juanita's Consulting. Okay, so we have the name of the company, followed by the name of the statement. In this case, is going to be income statement. So we just make a small indent here and write in income statement. And then we're going to write in for the period. This case, we're going to write in for, and it's going to be for month ended. June 30th, last day of the month, 20, and we'll just make this 2023 for the year. Okay, so remember, our income statement only shows revenue and all of your expenses. Okay, that's what your income statement should show. So now we're going to record in all of that information. We're pulling that information directly from this completed worksheet. Okay, that's where I'm going to pull this information from. So again, we're going to start with always list our revenue first. So we're going to list revenue, just 2 semicolons, 2 colons here. Okay, and then of course under our revenue, we're going to if we stated on our worksheet, our revenue is being generated from consulting fees. So that's what we're going to write underneath revenue. So it's going to be consulting fees. Okay, so again, remember that leading dollar sign is only going to be listed on the first, in the first column. So in this case, we're going to list a dollar sign. And remember our consulting fees, and let's just bring this down to consulting fees here. Our consulting fees was $4,204. Remember, should be listed on the right side, so which is because it carries a credit balance. So that's what we're going to do here. We're listing it on the right side, and we're going to list it as 4,204. Okay, that's going to cover our consulting fee because we only have that one revenue account. Okay, so now we're going to list all of our expense accounts. We don't have to skip a line, but we're going to just write in expenses, followed by, again, our colons. And then underneath that word expense, we're going to list all of our expense accounts. So remember, our expense accounts can be listed by the account number, or we could list them by the dollar amount, meaning from the largest amount to the smallest amount. So it's up to you. But in this case, we're going to just be listing all of our expense accounts by the account number. So we're going to begin with our wages expense account. So our wages expense account. So we're going to, again, just like we did for consulting fees, we just made a small indent up under the header, and we're going to make a small indent under the expense header and start with wages expense. And remember, all of these was listed as a debit balance. So we're going to list these on the left side. Remember, the dollar sign is only going to be at the top of the column. In this case, we're going to list the dollar sign only one at a time, and it's going to be listed on the wages, the first expense account. In this case, it's going to be wage expense account. So again, I'm just pulling all these totals from off of our worksheet. As you can see, This is our $1,600 on the income statement. And that's going to be that $1,600 is going to be for wages expense. So I'm going to just pull all this information off of our worksheet. So let's just continue. Again, we said that the wages expense was $1,600. So let's fill in our next account is advertising. And that's $60. Again, we don't need to put that leading dollar sign. We're going to, you only put that dollar sign on the column header. Rent expense followed by rent expense. And that's going to be $500. Supplies expense. The last expense account is going to be a miscellaneous expense. And that account is going to be $21. So as you can see on our income statement, we listed our revenues. And then of course we listed all of our expense accounts in this order. Okay, so now we're going to total, and we are going to just draw one line, just one line over our expense column. Okay. And then, but we're going to total everything on this, on our left, on the right side of our equation. So we draw one line under our expense totals, but we're going to put that total over here on the right side. So our expenses total $2,754. And let's just compare with what's on our income statement on our worksheet. As you can see, our total balance for expenses is $2,754, which is exactly what we will record on our income statement, because that's what all of our expenses total. So therefore, our revenue was $4,204. Our expenses was $2,754. Again, our income statement is going to show whether or not we have a net income, a net loss. In this case, we have a net income. So our next, we will write on this line, we will total our expenses. And as you can see here, that's what we did. So our total expenses is $2,754. On the next line, we're going to write in, this is where you write in net income or net loss. So in this case, we have a net income, and I apologize. We have a net income of $1,450. And we will include the dollar sign on the balance. Okay, so we'll draw a line here because this is just the balance total for total expenses, but then we will double rule our net income balance along with the dollar sign, include the dollar sign on the net income. So again, revenues minus expenses, because our revenues was more than our expenses, we have a net income that's going to show on our income statement. Okay, so we know that our net income is going to be $1,450 for the period. Okay, so now let's move on. Our next statement, second statement that we will prepare is going to be our statements of owner's equity. So remember, as I stated earlier, you always complete your income statement first, because you need to know whether or not you have a net income or a net loss in order to complete your statements of owner's equity. So in this case, let's move on. And we're going to move down here to number 2, And this number 2 is going to be our statements of owner's equity. Again, we're going to fill out this section the same way. We have Juanita's Consulting. And then, of course, we're going to put the name of the statement. In this case, it's going to be statement of owner's equity. And again, we're going to record it as for month. And that's going to be for a month ended June 30th, always the last day of the month, because we are preparing this statement at the end of the month. And I'm just going to put in the year. So this is our header, our name of our company, the name of the statement form or financial statement, statements of owner's equity. And then, of course, we record our period. We do this for all of our financial statements. So now let's move on. So again, we're going to revisit our income statement because there is some information that we will need to pull from our income statement, which is going to be that net income or net loss total. So here, so the name of the owner, that's what we're going to begin with on this top line. Her name is Juanita Alvarez is her last name. And this is going to be her capital as of June 1st, because that's when this person began the business, was June 1st. And we'll just say this was 2023 of June 1st. So again, the statements of the owner's equity is listed on the right side of the accounting equation. So we're going to list the original amount that was invested in the business as of June 1st is going to be was $7,000 was her original investment for June 1st. Okay, so if we go back to our worksheet and if we pan over to Juanita's Alvarez Capital, we can look at her trial balance and we can see based on her capital, she originally invested $7,000 into her business. That's what's showing on her capital account. So again, because this is the capital account, the statements of owner's equity, which will show her original investment, that's what we're going to also record her original investment, which is, again, we going to record $7,000, her original investment. Okay. So again, the next line, we're going to record net income because we need to add that net income into her original investment. So again, we need to pull this amount, whether it was a net income or net loss. We're going to, in this case, it's going to be a net income. So we're going to write in net income. And it's going to be for June. So there's going to be how much net income was, what net income was at the end of June. So in this case, we know it's going to be $1,450. We're going to record that on the on this side of the form. So that in this case, we're going to have our dollar signs. Same thing with the dollar signs here on the column headers. Going to be $1,450. So next we need to subtract out any type of withdrawals or for personal use that Juanita Alvarez withdrew from the company. So here we will put less withdrawals. So we will write this out. For June. So as we can see here, she had $800 worth of drawings. Let's verify that amount because we need to go back to our worksheet and let's determine how much money that she withdrew. Let's just go over. Again, we want to make sure we are pulling information from our adjusted trial balance, but these are our most updated balances. So let's pan over and let's look at her drawing account. So as you can see here, we look at her the adjusted trial balance here. So as you can see on the adjusted trial balance, we see that $800 that she withdrew. And again, this is going to be her drawing account. So this is where we need our worksheet to get that information. So we looked at our worksheet, we determined that she had a draw. Remember, our drawing account carries a debit balance, and drawing is listed on the left side of the equation. We're going to list it here on the left side as well. In this case, it's going to be $800. Okay, so because we need to do find out what our balance is for our capital account, we just draw a single line, single rule under what our net income was, and then a single rule under less withdrawals. Our next line, we're going to include what our increase or decrease, in this case, increase in capital. So this just determines how much money that we have. So we have to subtract how much she withdrew from how much she actually made, or her net income was at the end of the period. So her increase in capital wasn't $1,450 because we have to subtract out what she withdrew. So her actual increase in capital was only $650. Correct? Okay. So now we are going to just draw a single rule line up under the 650. And our next line, we're going to record what her actual capital is at the end of the period, what her statements of owner's equity for her equity account is going to show. So in this case, we're going to write out her name again. And in this case, it's going to be Juanita Alvarez. And it's going to be capital. And it's going to, this line, we're going to actually show, remember that first line is showing that original investment on June 1st. We're going to show what her actual capital is as of June 30th, 2023. And that's where we're going to show that. So here, her actual increase in capital was only $650. Her original investment was $7,000. So we're going to add these two together, and now we're going to get $7,650. Okay. So this is her income statement. Again, we pull all this information off of our worksheet. This is her statements of owner's equity. And we had to pull, we of course needed the net income or net loss, and as well as to record, to figure out what her actual owner's equity was at the end of the month. We actually had to pull any withdrawals she had. We pulled this information from the adjusted trial balance. And then of course, now we can calculate what her actual capital balance was at the end of June. In this case, we can see her actual capital balance is $7,650 at the end of June. Now, the very last statement that we're going to complete is going to be Juanita's balance sheet. So let's move on to the balance sheet. So remember her balance sheet, of course, let's just pan over back to our worksheet, Juanita's consulting worksheet. So remember all the items that our balance sheet include. Our balance sheet only include from our cash account to our drawing account. Okay, so this is what it's going to cover. These are the accounts. Because remember, our consulting fees and all of our expenses are going to be included in our income statement. So our cash, from cash to drawing, these are all the accounts. that's going to appear on the balance sheet. So as you can see here, based on the adjusted trial balance, we just pull those accounts on only. Those are the only accounts that we pulled over to our balance sheet, the only accounts. So now we're going to actually record those amounts using the information on our balance sheet. We're going to record it on our actual statement. Okay, so the balance sheet is going to be filled out in similar manner that we filled out income statement and statements of owner's equity. Again, we're going to include the name of the company. In this case, it's going to be Juanita's Consulting. And then, of course, the name of the statement is going to be called balance sheet. And then we're going to only just put here the end of the last day of the month. So we're going to list it as June 30th. And I'll just use 2023. So again, we are pulling information from our adjusted trial balance. Those accounts that only shows on the adjusted trial balance, we are just pulling those accounts over. So again, all of these accounts from 1 to 10 that you see here, those are the accounts that are listed on your balance sheet. Okay, we pull those balances over. So let's go ahead and record those on our actual balance sheet statement. So this is how we're going to fill out our balance sheet. So we always start with the title, or the header is going to be called our current assets. So remember, we talked about on Monday that your current assets are going to be all those assets that can be converted to cash within a year. Anything that can be converted to cash within or a year. So again, I'm going to write in all of the accounts under current assets, and these are going to be all of my asset accounts. And I'm going to begin with, of course, we're going to indent. And our first account, as you can see, is going to be cash, because that's what our first account here that's listed is, cash. Okay, we're going to follow that. And I'll put the balances in, the balance for cash. That CARES is listed on, is always listed. Our asset accounts are always going to be listed on the left side of the equation. CARES a debit balance. So we're going to list it here on the left side as well. So again, we're going to list our headers, dollar signs only on the header. So in this case, our cash account, as you can see here on our balance sheet, is $5,285. So, and that's what we are going to list here as our cash balance from our worksheet. Okay. Our next account is that we're pulling over, that shows on the balance sheet, is going to be our accounts receivables. And that accounts receivables account has a balance of $1,075. Again, these are all of our asset accounts have debit balances, and that's how we're going to be entering on the balance sheet. We're entering them on the left side. Okay, so I'm going to just write in the rest of these. We have our next asset account, which is going to be supplies. Now, remember, our supplies account, we had to make adjustments to that supplies account. We started out with $750 worth of supplies. We made a $250 adjustment. Our adjusted trial balance, of course, is showing what's remaining, which is $500 remaining. That's what was pulled over from that asset account. $500 is going to be our new balance for supplies, which is what we're going to record here as well. So all of our adjustment accounts are going to be listed as the same. So we have our prepaid insurance account is going to be listed next, which is our next asset account. and that's going to be prepaid insurance. And that amount, again, we had to make some adjustments to that account as well. As you can see here, we purchased the insurance policy for $500, and we used up $100 of that insurance policy for the month. Our new balance is $400. Our next account, and I think that was our last, that was the last asset account. As you can see, our last asset account was going to be prepaid insurance, and this is going to be our current assets that are listed. So our current assets, we're going to just indent somewhat, and then we're going to write total current assets. Okay, and so we're going to record the total over on the right side. So our total assets in this case, we're going to record them on this side, and let's just rule this. So always rule that top line under your last amount. In this case, we're going to rule up under prepaid insurance. That total should be $7,000, and because this is a total, we're going to put that dollar sign, and it's going to be $7,260. Okay, so let's just verify that total. Let's just make sure we have all of our totals together. So these are our current assets, beginning with cash all the way to prepaid insurance, which is our current total assets. That's the current amount. Okay, so now we're going to list our remaining assets. So these are going to be our remaining assets. So we're going to start here, and we're going to write in property, plant, and equipment. Okay, in this case, under property, plant, and equipment, we're going to list our office equipment. This, again, this is going to be our asset account. Okay, so that's going to be our property, plant, and equipment. Of course, as we see on here, we originally purchased office equipment for $2,200, which again, it was that this is a asset account which carries a debit balance. We're going to list it on the left side of the equation. So here we're going to list it here. That amount was $2,200. Okay. So we also need to list remember that accumulated depreciation, that's also going to be listed on our balance sheet as well. So we're going to just put on here less, and that's going to be a less accumulated depreciation. Okay. All right, and so as we can see here, we had depreciation that's showing for $110. So of that $2,200, we depreciated $110. So remember, it always we always take that depreciation off of this office equipment account, asset account, until we have used up, expensed or accumulated all of the original balance. So in this case, it's $110. So in this case, we're going to record that $110 here. And so because we're going to show calculations, we're going to just single rule here. And then now we need to show, because remember, we've recorded this as less accumulated depreciation. So here is where we're going to take that depreciation from off of the original amount or original cost of the office equipment. We paid $2,200 for it. We have, and I think that this balance should be 110. Let me make that correction. We accumulated $110 so far. So therefore, we still have our new balance for accumulation depreciation on that equipment is going to be $2,090. So we had to subtract that, the accumulated amount. We subtracted that so we can show how much more what our new balance is as far as how much more we need to deduct from accumulated appreciation over the period of asset accounts. Okay, so our asset accounts, we are going to now total up our total assets. Our total assets, so remember, we had our current assets total $7,260, as you can see here. So here we had listed our office equipment that we purchased, less any accumulated depreciation. And so here we are going to, our total assets is going to be actually 9,000. And again, we're going to just draw a single rule because we're going to balance, add a balance. So here we're going to list total assets, as you can see here. So let me just go down to here. So we're going to list our total assets on this line here, and it's going to be $9,350. Okay. So let me just move all of this up. So I think I went down too many lines. We're going to add 7,260 plus 2,090. That's going to give us a new balance for total assets of 9,350. Okay. And we're going to just draw a single rule under that line. So just a single rule line. That's going to be our total assets for the month of June. So now let's continue our balance sheet. Remember, we recorded our current assets up here. Now let's move into our liabilities. We're going to just record that on our next line, which is we're going to write in our header here. And then again, we're going to always list whatever our current, just like current assets, we're going to list our current liabilities. Remember, our current liabilities are going to be things that can be paid within a year or less. So those will be accounts like accounts payables. So remember, we're listing our liability accounts. And let's just remind everyone that here we have our moving into our liabilities account, our accounts payables. And if we pan over to our balance sheet, we will see that our accounts payables, we have a credit of $1,500, and we pull that same amount from off our adjusted trial balance. This is the exact same amount that was showing as well on our trial balance. Okay, so that's the amount that we are pulling from off of our trial balance, which is going to be that $1,500. So that's what our accounts payables balance is for the end of the period. So let's go ahead and list that amount. That accounts payable amount is going to be $1,500. So we have our next liabilities account is going to be our wages payables account. As you can see here, that we opened up that account because we was had to pay employees or liable to pay, have a liability to pay employees. So therefore, we added a wages payables account to our liabilities account because we was liable for $200, as you can see here. And so that amount also is showing here on the balance sheet as well. So we're going to record that amount here as $200. That's going to be our, let me just write in our wages payable account title here. Okay. So we have our accounts payables was $1,500. We have our wages payables, and that is all of our current liabilities. Because again, our current liabilities are going to be those accounts that can be paid off within a year or less. So in this case, we're going to total up our current liabilities. So again, just like we did for our total current assets, we're going to do the same thing. So we're going to have total current liabilities. Our total current liabilities, we're going to record that over on the left side. I'm sorry, on the right side, we're going to add up these totals for our current liabilities, and that total is going to be 1,000. And again, let's make sure we put our dollar sign here because it's a balance, that a total. So $1,700. Okay, it's going to be the total for our current liabilities. So we don't have any long-term liability showing, so we only have current liabilities, and that was accounts payables as well as wages payables. So, or more of a long-term liability example would be any type of notes payables that we would maybe couldn't pay off within a year or less. So in this case, we don't have any. So let's just move on to our next header. Remember, we have assets, we have our assets, we have our liabilities. So as looking at our worksheet, we also include our owner's equity. Capital is also included as well as that drawing account. So we need to pull that information over as well. So here we're going to list our owner's equity. So we're going to list our owner's equity. So under owner's equity, again, the name that we're using for as owner's equity is going to be Juanita Alvarez Capital. Again, we're going to pull some information in order to get her new capital balance. We need to refer back to her owner's equity statement. So as we can see here, at the end of June 30th, her capital account was actually $7,650. So that's the amount. We're going to pull that amount in order to complete our balance sheet. We need her actual capital at the end of June. Again, we're going to pull this information from her statement of owner's equity. Her capital account has $7,650 in. So that's what we are going to use here in order to complete our balance sheet. So her capital account, and we're going to just record this over on the right side for capital. Again, that amount was $7,650. We pulled that from the statement of owner's equity form. Okay, so now let's just total up. We need to total up liabilities as well as our capital. So remember, everything that's over on the left side of the accounting equation, or right side, I should say, in this case, liabilities and owner's equity is on the right side. We're going to total up those amounts. So we're going to total up our liabilities as well as our owner's equity. So let's just write in total liabilities and owner's equity. To figure out what that amount is. So we show that our liabilities totaled $1,700 for the end of June. Our capital showed $7,650. So this is what we're going to total. So we're going to just single rule under the 7,650. We're going to add our current liabilities. We're going to add those to our total capital, and we're going to get $9,350. That's what we're going to get, $9,350. So if you look at, let's take a look at the balance sheet, and we are going to prove that we are in balance on our balance sheet at the end of the period. So our current assets and in long-term assets should total liabilities or equal liabilities and owner's equity. So as you can see here, we have our total assets and current and as well as our long-term assets. Those assets are going to total, they had total $9,350. Our liabilities as well as our capital also total $9,350. So as you can see, we are in balance on our balance sheet. All of our asset accounts equal our liabilities as well as our owner's equity at the end of the period. So then you either recorded your totals wrong or pulled something incorrect from your balance sheet, or you have an error somewhere. So you would need to go back, figure out where your error is on your worksheet in order to make sure that your balance sheet is in balance. As you can see in this case, again, we are in balance. So this completes part one of showing you how to pull information from a worksheet into completing and how to complete your financial statements, the income statement, statement of owner equity, as well as the balance sheet.